Okay.
All right. So, yeah, real quick, Sunil. So you say you do most of the recommendations, or all of them, or does it really depend on what the market's looking like, or if you particularly like a position or not?
Mm, No, I just wait for your recommendation. I do only put credit spread that you asked me to do.
Okay.
So I only do those, and I'm doing so far so good actually. I'm
Yeah, that's
only doing the ones that you recommend, and they're really doing good job.
yeah,
I never
sounds
had to,
good.
yeah. I've never been in the money, and I always, get out on time with the profit. So which is good. That's all
Yeah.
we matter, right?
Yeah, of course. Do you usually get out at buy to close at $5 or so, or do you just wait until it expires?
No, I actually exit out before it expire.
Yeah, I usually do too. On Thinkorswim, if any of the options are worth $5 or less, you could actually close
Yeah,
it for free without any commissions.
really?
Yeah, now the actual position has to be at 0.05. If the whole spread is closing at
Uh-huh.
0.05, they still charge you commissions. So,
Oh,
for
okay.
instance, let's say you sell the put at say $30 and you buy it at $25. So you really closed it at $5 in the end, but they would charge you commissions on those.
Gotcha.
If one of the actual options is 0.05 though, then it's
Mm-hmm.
a free commission to close it. So
Oh, okay. I didn't know, but I actually use E-Trade.
okay.
So I don't know. I have to check it out with E-Trade to see if I just let it expire or close
Yeah.
it at 5 to
They
see if they still charge it.
I think they charge, but I'm not 100%. Do you know what the commissions are on E-Trade?
I think it's a dollar. I know it's dollar 5 cents something. So it's
Is that
so
for the
for
full
two,
spread?
yeah, for
Okay.
false per dollar.
Yeah, that's not
Yeah,
bad. It's a little less than Thinkorswim in the initial 65
yeah, yeah,
per.
yeah.
If you do pretty high volume on spreads, you could ask to lower commissions. It's a little hard to get done though, but
Uh-huh.
if you're, obviously giving them a lot of money pretty much for the commissions, you could consider
Correct.
asking them, and it won't hurt to ask, to see if they can lower it a little bit. Um, I got my
Oh,
I got my Thinkorswim down to 50 cents per individual option, so it'd be $1 for the whole spread. So
really?
yeah,
So just
you probably need to
yeah.
have at least $150 worth in commissions per
Mm-hmm.
month to
Per
be able to
month.
also talk to them about it. Some people do even more than that. Again, it can't hurt to ask, so you might as well try. And then if they see you're doing a lot of volume, or if you're doing multiple contracts with a lot of things, they might lower it. So it can't hurt to ask.
Yeah. Oh, that's a good tip. Actually, I'd never thought about that. Now I'm gonna actually ask them to see if they can lower it because I'm sure I'm paying more than $150 per month to them.
Yeah, you might as well see. And then
Yeah.
you could give the like subtle like indirect threat, like I'm thinking about moving to a different brokerage that happens to
Uh-huh.
be lower in commission and see if they might
Uh,
bite a little bit. And like it's like when you call the cable company and you say like I need a
right.
lower
Yeah,
rate.
moving to AT&T, right?
Right. Yeah,
Gotcha.
so that's good. What about your percent allocations? You say you're doing mostly the credit spreads?
Actually, not the credit spread, but the one, the the PCS, the one you recommend, like one with the credit spread, but one is the PCS, right?
Yeah, the put
Put
credit spreads. Yeah.
put credit spread, yeah.
Is that what you're primarily doing? The account that
Yes, that, yeah,
okay. Nothing wrong with that, especially since it's working well. Um,
yeah,
if what some things to consider are to be looking into the cash secured puts as well. And if you want to make it relatively similar in size, you can look at the lower strike price ones that I give. Um, for those in general, it could be better at times because you could wheel them and you don't really worry too much about getting assigned on them. So
okay,
in the off case, we go low deltas usually, but in the off
right,
case that you do get assigned, you could just cut the 100 shares and then sell calls against it at the same price
right,
you sold the put at. So you'd be making
right.
money other direction as well.
And, and I'm doing also your CSP as well. Both
Yeah.
of them actually. I'm doing both.
Oh, okay.
CSP is actually, yeah, and they are actually both are good. So
So you do a certain percent of your account in one strategy over the other, or about the same in both?
it's about the same.
Okay.
I just
Yeah.
follow your recommendation and I tried in E-Trade and I get usually filled at the same price that you recommend. And
Right.
then I just wait for, usually, normally I see the pattern, once you like buy it, after like couple or 5 days later, you can see $10, $15,
Yeah.
like positive, like I'm showing like green on my all CS on
Right.
CSP and on PCS. Yeah, so that's all. And I do
Yeah.
not have much time, so I normally you probably see me. I'm really silent during during market hours. So,
Oh, that's fine.
but yeah,
Yeah.
whatever time I have, I just do it just for fun.
Yeah, that's good. I mean,
But but
a lot of
but
the
my
member,
plan to yeah, my plan to scale it up a little bit. Since I've been doing this for now actually more than 3 months with you. Actually, I
yeah,
see I know I joined with you I think in June, so it's been more than 3 months now. What do
yeah.
you recommend actually, Lance? Should I just scale it up a little bit, like look at more uh, like zero date zero date DT?
I mean,
Right?
possibly you could do a small percent of that. If you go to the ebook strategy guide, there's
Mm-hmm.
a whole article on percent allocations and money management. And then I
Mm-hmm.
give different possibilities depending on your risk tolerance. The zero
Mm-hmm.
DTE are a little riskier in general because you could
Mm-hmm.
have bigger swings that happen in one day, obviously, while
Right.
other, put credit spreads and cash group puts, those don't necessarily move dramatically one day after another. So you can
Right.
consider a small percent on those. But if you're not
Yeah.
comfortable with that, it's perfectly fine to just stay with pretty much all of just the longer dated ones and then just go from there.
Gotcha.
Yeah, I
Right.
personally don't do much in the zero DTE. I like the longer dated in general.
Mm-hmm.
I know some members really like the zero DTE, and we have a few that are doing that primarily, and they don't even
Right.
bother with the longer dated.
Yeah.
As long as
I
they're
know
able
my
to handle the swings.
yeah, I know, right? There's a lot of swing plus and minus both way, right?
Yeah,
So it's
I mean
hard to manage.
you could easily gain 3, 4% a day or lose 8, 10% if you stop out of it.
10% a day, yeah,
Yeah.
exactly.
So if you are going to do
Yeah.
zero DTE, I would recommend leaving some cash on the side. So
Uh-huh.
if you were doing, say, $3,000 into that strategy,
Mm-hmm.
each spread uses $500 minus your credit receipt. So just say
Mm-hmm.
about $450 or so per spread in most days. If you had
Right.
$3,000, I would probably do about 3 to 4 contracts and not do
Mm-hmm.
the full $3,000 worth.
Got you.
Because if you happen to get stopped out a few times in a row, knock on wood
Yeah.
here, it hasn't happened. Like we haven't had
Yeah.
multiple stop outs all year, but there is a
Mm-hmm.
chance that could happen. So if you happen to use a full account, like the full 3,000, doing about 6 contracts, and then you stop out
Mm-hmm.
2 or 3 times in a row, you're going to be down quite a bit, and then you'll only do 5 contracts anyway. So I would recommend doing maybe 4 contracts or so. Leave the extra
Mm-hmm.
about $1,000 on the side in case you have any downturns.
Or did you say for contract?
Yeah, if you're going to do 3,000,
Yeah.
use about 70 to 80% of your account for that particular
Okay.
strategy that you're doing.
Got
So,
you.
for instance, let's say you have a $10,000 total account. Maybe
Uh-huh.
do about 3,000 in the cash
Three.
group puts. You'll do
Uh-huh.
3,000 in the credit spreads, so about 5
Uh-huh.
credit spreads. And then the zero
Uh-huh.
DTE, you would probably do about 4 contracts or so.
For
And leave,
contract. Okay.
yeah, and then leave the extra 1,000 just on the side.
Side. Okay. Okay.
Because then again, the
Uh,
downturns could hurt a bit with the swings. And then
Okay. Yeah.
as it works, like if we're profitable like this month, we're looking at pretty
Mm-hmm.
decent profit right now on the zero DTE.
Right.
You could also
Right.
scale up slowly from there.
Yeah, the volatility is really high right now. So
Right.
I always wanted to ask you. I know since I don't know whether there's anybody else. I know I don't want to just spend time on myself. So I don't know if someone else joined.
Yeah, we have
Or
another question in the chat. Let me answer real quick. So David said, I plan on doing half of my portfolio of option trades and half for future trades. How does that sound? I think that sounds very reasonable. For the future trades, again, you want to leave the cash on the sidelines. So if you're going to do the say 0.03 delta, 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 0.03 delta 0.05 deltas, MES puts. I always say the initial buying power needed. And the way I look at those is from paper trading on Thinkorswim. So that one I leave without actually entering any futures positions. But I just want to see what the initial buying power would be if you were just starting the position out. As you do more and more positions, though, your buying power could change and actually be lower than what I was saying. But it's just a good safe way to go with assuming that you don't have any positions. For instance, a lot of these weekly futures, it might use up about $400 or $500 in buying power. But you want to leave at least double that in your cash, just on the side. Because let's say MES starts to drop a lot, your delta still might be good. It might be 0.1, 0.15 delta. And there's still a very good chance that it won't get close to in the money, but it will use up more of your buying power for it. And you don't want to get into a case where you have no more buying power left, and then you're having to add more money to accounts, or you might have to close positions when you don't want to because they still could easily be profitable, but you have to close it to get your buying power back up. So as long as you're doing at least the amount that I'm recommending, if not, if you want to be more conservative, it's fine to put even more, like possibly double that. And you can still get a decent return on them. Get, even if you left the same amount of cash, you're looking at 2-3% a month there. If you're going to double the cash, you can still get 1.5% a month, which is good long-term growth in that. And we want to try to do this with the long game and not, try to do well 1 month and then blow up the account the next month. Should I close my future positions? They're already positive. Weekly is ideal. For Thinkorswim, if you end up closing the positions, you have to pay the commission again. And I don't really recommend it because the commissions are going to use up a pretty large percentage of your total profit. If you do them on Tasty's trade, which I do them on Tasty, they don't charge you to close the trade. They do charge you to open it. However, on Tasty Trade, to open the trades, it costs the same as Thinkorswim. So if you're going to end up selling them and then buying them back to close them, you're pretty much paying half in commissions on Tasty. So I guess it really depends. If you're using Tasty Trade and you already got a good profit, I'll go at least 50% profit. So let's say you sell an MES at, say, 7 credit. You want to buy it back around 3 credit or so. That'd be okay. And then you could just add a new position on afterwards. But if you're on Thinkorswim, I wouldn't recommend closing them. I'll just recommend just waiting it out until it expires worthless. And so far, again, knock on wood, all of them have expired worthless. So you can just wait until it expires. You'll get your buying power back up, and then you can just do the new trade in the next month. So also when I'm doing those weekly recommendations, you pretty much want to take your total account size for that strategy, divide by 4, and then as the 4th one finishes to the 5th one, the very first one will expire worthless. You get your buying power back, and then you can start the new position. So again, if you're doing, most of them take about $1,000 or so per individual trade. So if you have $4,000 in that strategy, you can do 1 position every week. And then it also helps spread out your risk a little bit because the market drops a little bit. If you notice the next week, the strike prices are lower because we want to stay really low deltas, really far out of the money there. And you could multiply that by whatever number you have. So you have 8,000, you could do 2 contracts a week and so on. Any other questions? If Tony, you have any questions, you could leave it in the chat or just speak it out if you'd like.
Hi, can you hear me okay? This is Tony. Oh, very good. Okay. Yeah, you actually answered a lot of the questions I had because I'm not new to options, but I'm new to this strategy. So I spent probably the last month just going through all your material, and I got involved with because of Russell with the trading room, and so I've been learning a lot there. And so today I actually did my very first trade that you recommended on the 0 DTE, and it worked out great.
Yeah, that was good.
You can nice see to have the confidence to do that.
Right. You can see how the market was really high up at first. And we usually want to continue in the same direction. So if you see a big open, like goes up almost 1.5% or so at open, you usually want to go the put credit side only on that because there's a pretty low chance it's going to turn not only to one 0.5% profit, but then go down 1 or 2%. So for staying those low deltas, you'll be in good shape in most cases. There were a few cases last month where we did get stopped out because it did turn, but it's relatively rare when you look throughout the whole year. For the trading room, you're used to buying options, like buying calls and puts in general?
That's right. Yeah, that's what I was doing.
Yeah,
But
no, that's definitely, like, I think it's a little bit riskier in general, but you could get more returns that way. Because obviously if you buy a call and the stock goes up, way like passing the money, then it could be pretty big gains. Like you could look at 30-40% gains there. However, theta is going against you on those trades. So if the stock isn't moving or going down a little bit, or even up if you're buying a call, but just a little bit, the time is still against you. So when you're buying options like buying calls and puts, not only you have to be right about the direction, you also have to be right on timing of it, which is hard to do. And in general, I think it's a little difficult, but it's okay to do those with some of the strategies. And what I see a lot of traders do is they might use some of their account for the like bigger home run type, big gains or possibly big losses and strikeout. Trying to use baseball analogies because playoffs are coming. But if you get some of those gains, you could use those for the passive selling strategies that I do as well. So it could be a good way to just get that passive income every month and whatnot.
it would be nice to make some income on this. I mean, there's a lot of turmoil and unknowns, and if all of a sudden the small retirement I have becomes a lot smaller, it would be nice to have an alternate way to learn a new method.
Yeah, of course. Like I primarily use this strategy in my own accounts because I think that we could beat out just buying and holding SPY in pretty much all markets. Obviously, if it's a huge bull run and SPY goes up 20% in a year, it could be pretty tough to get higher than that. But I also notice I usually get less volatility in these because if we're selling really far out of the money, then even if the stock goes up, you're going to make your profit. And then if your profit, our ideal profit's around 2.5% a month in the total account, that's still usually going to beat or get close to SPY anyway. So it could be useful at pretty much any age, I think, like retirement, even younger like me, because I figure I'm going to be doing these strategies even when I retire as well.
I did a strategy. I don't know if you know Stephen Brooks, but
Yep.
he's kind of an interesting character, and he has his Market Hero program, and I just read through that, and I tried one, and it was called an 80-40, no, 30, 45-30 trade. That's what it's called.
You remember how that's set up?
Yeah, let me get my note here real quick. In fact, I just closed it today. Yeah, this is spread. Get my other note here. 45. Yeah, it's a 45-30, and so you go ahead and you buy one 45, and then I think you sell one at 30. I think is how that works out. Oh, here it is.
Could you give an example?
Okay, sell the 45-30 delta put credit spread in Q2.
Okay. And that's a little bit more in the money, pretty close to in the money. Obviously, you'll make more returns if it works out. And if the stock stays where it is, goes up a bit, and even down very slightly, it'll still be profitable. The issue is if it drops, like not even a big amount, like a decent amount, you could already be in between the strike prices, and then it's pretty difficult to get out of it at a decent profit, I think. So if you look at a lot of the recommendations I give for the spreads, I'm usually at 0.12 delta or even less because I want to stay really far away from the stock price. So then even if I'm wrong on the direction and it happens to drop a little bit, you still could be in good shape in terms of like making a profit because it didn't get to in the money.
Yeah, I was kind of wondering about that. So yeah, you're selling a 45 delta put and then buying a 30 delta put. And I was wondering, well, in a day like this, it seemed to work because everything's going up. But when it's going down, that I could see this thing generating some losses. Is that typically what you would find?
Yeah, it would be. Let me share my screen real quick and I'll show you a few examples.
Okay.
because obviously in a big up day, it would be really good because it's going further away from where your price is. So I'll just pick Procter and Gamble, for instance. So right now it's at 130. And let's look about 45 days out. And we're going to go high delta. I mean, 0.49 is a little higher than what you saw. But if we go to the 130 strike and sell that put, buy the 125 put, make it a put credit spread here,
Mhm.
it makes a good credit. Like you're making $186 maybe. You'd probably get $175, $180 on that trade for only using $500, which is definitely higher than what we recommend and what we get. But that's pretty much in the money. It's literally only 10 cents away from the current price. So any slight drop, and then you're in between the strikes already. And then there's a good chance that that credit could just evaporate.
Okay, yeah, that makes sense.
I'll try to find another example. AAPL, not APPL. All right. So Apple 146 right now. Yeah, there's not many 40 deltas here, but you can do the 145. Again, that's not much of a cushion here. It's literally only $1.10 away from the current price. So any slight drop, like 1% drop, you're already in the money on it. And yeah, sure, you're getting a good credit on it, but if you're in between the strikes, you could be at a loss relatively quickly. Like obviously, if it goes below 140, which isn't a huge drop here, we're looking at about 4% or so, then you would lose $500. You did take in a good amount though. You made 180. You're still down about $300.
Okay, I understand what you're saying, right? It's a little riskier.
I think it's a little riskier. Obviously, with more risk comes more returns. So you could make more money with these, obviously. But like in a good bull market, these could be perfectly fine trades. If I was doing something with Apple, I'd look at the 10 delta, for instance. So if you go all the way to 120, the way to figure out the percent difference right now is at 146. Subtract 120, the strike price for the thing you're selling. It could go down 26 points in order for you to get in the money. And then you can divide that by the current price, 146 again. We're looking at a 17, almost 18% drop in order to get in the money on that, which is a big drop for Apple, right?
Right.
And this would bring in $38. Again, it's not $190 like you're seeing before, but if you think about the returns, you can make $38 off $500. That's 7.6% on your money in 45 days, which I think is still a really good return. And these are going to be a higher probability of success. Like you're going to be winning a lot more than you're losing when you go with the lower deltas. So again, higher deltas in general will have a lower win rate, but you could win more money. However, lower deltas, you would make less money, but a higher rate. And it's more about finding a balance that you're comfortable with in terms of those risk returns. I personally like the low deltas because they usually don't get that close. And then I don't have to worry too much about it. You just set it. You could, check it on it every few days, but usually it's just going to decay because as you get closer to that November 18th, let's say Apple stays where it is or goes down to maybe 140 or so, the spread is still going to be worth less than what it was before, and then you can just buy it back. You're essentially selling something at a higher price first, and then buying it at like wholesale prices afterwards.
Okay. What's the magic of the 45 days?
Data decay. So if you go really, really far out in time, let's say we go, a year out or so, there's plenty of time for a stock to move in that year. But if I looked at, 195 or so, that's a huge drop, obviously, from 146 to 100. But you have a whole year to get there. So if Apple stays where it is tomorrow, it's not going to go down much at all because you still have plenty of time for Apple to drop a lot, right? If you go much shorter, like say 3 or 10 days out, you're going to have to get pretty close to the current price to making decent money on it. It's at 146, maybe go to like 135 or so. This is definitely closer than 100. You can still make a decent return, and there's only 10 days there. However, if it drops right away, then it's going to be hard to get out of it pretty easily. So the magic number that a lot of people in like Tasty Trade, a lot of research has been done. Theta that starts to decay pretty rapidly in the out of the money options is what we sell. Typically around 45 days is when it starts to ramp up a bit, and theta starts to decay even more than when you're like a year out or so.
Okay, that makes sense. Thanks.
Yeah.
Right, and I really like your material you've written. There's a lot of effort you put into it, so thank you. And I really do understand what you write. Thanks so much.
Appreciate it. Yeah, I try to do it with the teacher's mentality. It's like assuming people know very little, if anything, about options, and then by the time they finish it, they'll at least have a decent grasp of it. So thank you for that.
Mhm.
Any other general questions, or we can look at market outlook if you'd like. Josh, I see you in there. How you doing, Josh?
Doing pretty good.
All right. No complaints. Pretty good. Like Curb Your Enthusiasm. All right, let's look at SPX real quick. So this was in end of August. It was near the high of the last 3 months, 4,300. It roller coastered all the way down to 38 or so hundred. Made a decent jump for about a week to 4,100. Fell off a cliff to 38, 35.84. And now two big up days. You see this big gap from yesterday to today. So yesterday it closed at 36.80 or so, and then it opened at 37.25. That's already a big up day before the day started, and you can see that it pretty much went straight up most of the day there. So two big up days in a row. It's hard to know what's going to happen in the future, obviously, but we could look at a few points that it might be challenging. So over here, there's a few days where it kind of hovered between 3780s to 3800s or so. So there's a chance that it might be some resistance here. We might see some leveling off, possibly. If you look here and here and here, there's a few points around the 3900 range. So there's a chance it could keep going and gapping up to the 3900s, maybe see some resistance, and big institutions might start to sell it off. For tomorrow, let's look at possible strikes. So what I do is usually in the evening and also first thing in the morning, I'll look at the futures market. You can type /MES or /ES. And this is the SPS in the futures market. We're down a little bit right now, 0.3%. But it's not dramatic enough yet to really make much of a decision if we're going to go put credit spread calls, credit spread, or both with an iron condor. So there's a good chance, at least right now, it might be an iron condor. And we want to go really far away from the prices. So we might go about 70 or 80 above the price. 37.92, we might look around 38.60, 38.70. And then on the put side, again, about 60, 70 away. So obviously the pricing's a little different right now instead of market open, but we look for tomorrow, 39.70. The 0.05 delta is around 36.70 or so. That's a big drop. It's about 100 points. So you're looking at almost 4% drop there. This would be a big drop. It's not guaranteed to not happen though, but there's a very high chance it won't get there. And then on the call side, 0.05, we're looking at around 38.60, 65 or so. Notice on the call side with the same deltas, it's closer on the call side than the put side in general, because in general, the market tends to drop very quickly and go up very slowly. Today was obviously an exception because it went up so much, 3% on the day. But those are some possible strikes to consider, assuming that ES stays about where it is tomorrow morning. And that's why I put a quick update. You know, I wake up, I barely use the restroom, barely brush my teeth, and then I look at what the futures are doing, right? And then my wife's like, "What are you doing?" I'm like, "I gotta look at the futures," and she just wants to go back to sleep. Anyway, so yeah, we'll see what happens in the morning. Usually around 7:30 in the morning Central Standard Time, I'll give a quick update on what MES is doing. I usually tell Josh let's strikes to look at right before I'm starting my planned learning community in the morning when the market opens. So you can consider doing what Josh posts. I usually give him strikes to consider, and they're usually almost the same or within 5 of what I mentioned. And then if you want, you can take those. If not, you can wait until 9 o'clock. Sometimes the market does move a bit in the first 30 minutes or so. So I think it's usually a little helpful to see what the market's doing in the morning. So give it a little time first. The 5-minute chart, you can see it went up pretty heavily the first 30 minutes. We still went call credit spread because I wouldn't want to go against that and make it drop down again. In general, they usually might continue going up or level off like it did the rest of the day. But this was good because I'm an SPY, USPX. First 30 minutes was around 37.80 or so. And what was our strike? 37.05. So 37.05 was all the way down there. At 9 o'clock or so, when we made the trade here, there's a very low chance it's going to drop all the way down there. And we could look at the last few days to see 37.05. Obviously, there's a big gap in the morning, and there wasn't any levels in the days before, but I was pretty confident it wasn't going to drop that much, especially with this big up move. So that's why I went call credit spread. It's tempting to do iron condors like pretty frequently, but if you see a clear direction in the market, just trade the other direction because there's a good chance it's not going to drop all the way back down. All right. Got about 5 minutes left. Is there any last questions that anybody has? Put credit spreads. People say the bull put spread, right? I just like put credit spread. It just sounds easier. It makes more sense in my head. It's the same thing, by the way. Am I bearish? Oh, I did say call. I'm sorry. Put credit spread. Yes. Am I bearish? Very short term. Possibly. It's too hard to say. The last 2 days have been up so much. It was almost 5.5%. There's a good chance it could bounce back down. Look at the longer chart here. I mean, it could easily go down another 100 points or so based on last week. And there's a little bit of resistance around 30, 40 points higher from a few months ago, though. In general, institutions typically look a little bit more short-term than 3 months out or so. But I don't really know if I'm not necessarily bullish or bearish right here. I'm not trying to predict that. We just see what the futures market does and then trade accordingly, I think. It's hard to know, yes. Trade the day. These are all good phrases, right? Maybe these should be YouTube titles. Trade the day. And then put the fun emoji cons so people see the videos. Any last questions? Would anyone be interested in me getting apparel and then we could wear t-shirts and say beta traders? Oh, I'm just joking around about that. I don't think I'd do that. All right, I think that's about it. So again, if you guys have any questions, feel free to send me a message on Discord. And I'm free in the mornings, usually around 9 to like 9:15 as well. And then my main times I'm free are around 10:45 to like 11:15 Central Standard Time. I have my planning period then. And then lunchtime, 12:15 to 1 or so. Those are the best times during the day to ask any questions. I don't want to be answering a ton of questions during class, obviously, with students bugging. Evenings are also fine as well. So feel free to send me messages. And thanks for joining, guys. So I'll see you guys
Yeah,
around.
thank you. Thank you so much. Appreciate it.
No problem, Sonny. All right, I'm going to close it out and have a good day, guys.
Bye. Good night.